Hello dear traders, I'm Maria Staradop and this is the review of crypto analytics from fx.co. It's the 21st of February today, Tuesday, and in our today's review, Bitcoin continues to consolidate near the 25,000 level and what to expect from the flagship cryptocurrency next, and what key macroeconomic events this week may affect market sentiment. Let's start. We will start with an article by Artem Petrenko and a technical picture first. How things have been going. Despite a strong finish in the previous week, Bitcoin failed to build on its weekend success. The asset spent the weekend in consolidation with attempts to jump above 25,000 level. However, it becomes clear that it is difficult for the cryptocurrency to move to make strong price movements on its own, and a significant portion of Bitcoin investors trade on stock markets which are closed on weekend, and this also confirms high correlation between Bitcoin and stock indices. Meanwhile, despite a historically weak month for the stock market, equities are performing quite well. S&P 500 index ended the trading week up and continues to hold the important 4,000 level. And much of this week's S&P movement will determine Bitcoin's chances to catch that very 25,000 mark. In addition, the head of IMF made a neat statement that markets have every reason to be optimistic as the US economy manages to avoid recession. At the same time, we should not forget Bank of America's statement that liquidity in the US system began to decline again. So given the minimal drop in inflation in the US in January, we can conclude that the quantitative easing policy has been suspended. It's likely that this allowed the labor market to strengthen significantly and the cryptocurrency market to make that bullish rally. The result of this pause was a minimal drop in inflation and the extension of the Fed's hawkish policy until at least April. However, as of yesterday, the article was written yesterday, there's no reason to argue that the resumption of liquidity withdrawal will dramatically affect the crypto market. What's happening on the chart? It's technical picture of Bitcoin. Let's have a look. After forming the biggest candle since September 22, Bitcoin tried to build on the bullish success of the weekend, but it managed to reach 25,300 level on Saturday. However, as a result, a strong response from sellers, the asset began to decline. Bears were able to absorb buying volumes near the important level 24,400, which is the key springboard for movement to 25,000. And subsequently, they continued the pressure and managed to reach the 23,800 level. But then buyers managed to seize the initiative and recover to 24,400. As of writing, or as of yesterday's midday, Bitcoin price was consolidating near that very 24,400 level. Meanwhile, technical indicators indicate the continuation of the flat trend. The RSI is moving sideways. The stochastic is trying to implement a bullish crossover. And Artem says that the situation is very likely to change when American markets open. And the key task of buyers this week will be to consolidate above the 25,300 area, where large volumes of sell orders are concentrated. It's also important to note that the confident consolidation of the price above 24,000 was caused by a powerful impulse reaction of Bitcoin buyers. The weakness of buyers over the weekend raises doubts about the viability of the current bullish reversal. So, as a result, Artem says that Bitcoin managed to get one step closer to that very 25,000 mark. However, in the next few days, the market needs to see increased buying volumes and positive sentiment, leading to an impulse move towards 25,000. Otherwise, the asset will fall to 23,800, 24,400 area and consolidate there. And most likely Bitcoin will move exclusively impulsively in the new week. If macro factors and S&P dynamics remain at least at last week's level, Bitcoin will make at least a retest of 25,000 level and at most a final break of this top. Okay, let's have a look at the chart for the moment. So today is 21st of February, and what do we see? Bitcoin didn't manage to even reach that very point. During all day yesterday it was hovering around 24,800, 900. It managed to reach only 24,861, but not 25,000 levels so far. It opened today at 819, and now it is trading at 24,960. Well, it's really close to that very 25,000 mark. Probably it will manage finally to break it, and probably it will just retest it. Who knows? But everything will depend on two key fundamental factors, and we move to another article by Katerina Kiselova. So what are the factors Bitcoin traders should pay attention to? First is FOMC meeting minutes, which will be released on Wednesday, February 22nd, tomorrow. The minutes will clarify the rhetoric of Fed policymakers at the February 1st meeting and explain in detail the financial and economical factors that influence the regulators' decision on interest rates. And this time, Bitcoin investors will pay great attention to this document, as according to remarks by some Fed officials last week, the interest rate decision at the previous meeting was not unanimous. And furthermore, the US inflation data was published last week was unexpectedly hot, so there is speculation that the Fed could use the meeting minutes to subtly adjust their rhetoric, and the report might hint at an imminent sharp rate hike, which could send the stock market tumbling down. Furthermore, Jerome Powell noted earlier that the meeting minutes will clarify when the Fed will stop its rate hike cycle, and this is also critical for stock markets and cryptocurrency market as well. So amid all this, Bitcoin investors should keep a close eye on the FOMC minutes to see if the Fed strengthens its hawkish stance. If it does, it will lead to a decline in cryptocurrency market. The second key event of the week, the release of US PCE data that will occur on Friday, February 24th. This index is a key inflation indicator for the Federal Reserve because it reflects consumer spending habits in a more timely fashion than the consumer price index. And this time it is expected to rise by 0.4% compared to 0.3% in December and 4.3% year over year. And if it surpasses expectations, inflation fears will intensify, as well as the expectations of a hawkish Fed policy stance, and these could also weigh down on Bitcoin's price. So these events should be paid attention to. Please keep in touch with news, follow our news reports, follow our podcasts. Please write your comments and questions down below. And as usual, I wish you profitable trading and a successful day. Until next time, see you tomorrow.